Does 2012 offer new and exciting opportunities, or will the old problems remain? Chris Hart now joins me from Investment Solutions to discuss economic trends and the global markets going forward into 2012, because we're almost done with 2011, right?
We're virtually done with 2011.
And what a way to end it off, with concerns of default, with massive changes on the macroeconomic front. And it really all depends on monetary policy at this point in time, because that's really where we've seen the activity this year.
A lot of activity, and in fact what's happened in the last month or two is that central bank activity has started to become quite aligned. With the European Central Bank cutting rates, we're now starting to see coordinated easing around the world, because even in your emerging markets where you had a rate hiking cycle and tightening to deal, you're now seeing that turn where that's starting to come down. Brazil had a rate cut just about a week or two ago, signaling that they actually starting to
But
look
is cheap money the real solution to the problem that we have?
No, I actually believe there's a fallacy with cheap money, in the sense that economic growth is not just driven by low interest rates and consumption demand. It's also, to fund economic growth where you're structurally expanding the economy, you actually need to resource that from savings. And if interest rates are too low in relation to where the inflation rate is, and you actually don't generate the savings.
So we need to be in a real interest rate environment.
Exactly, because without the savings, then low interest rates can actually be an obstruction to growth rather than a support to growth.
Chris, if you can figure this out sitting here in Johannesburg, then surely the central bank governors, the Federal Reserve chairmen realize that this could be
I think
a negative overall.
They're too dependent on Keynes as an economic theory, and this is possibly why it's purely on the expenditure side that they look.
Well, we're looking at the Federal Reserve. Ben Bernanke has time and time again reiterated the fact that we're going to see ultra-low interest rates for an extended period of time. Do you expect this to continue into 2012? And do you think South Africa will follow suit?
Well, I don't think we're going to quite follow suit to that extent. I think inflation really is on the rise, and we've already got negative real interest rates. If we did not have a slow economy, the central bank would be hiking already. But the central banks around the world are focusing on financial stability and economic growth. Unfortunately, there's so much they can do at interest rates where they are at the moment in South Africa and in Europe and the US. If you're not generating growth, it's not because interest rates are too high. At this stage, there are other reasons why the economy is not growing. We need to look at where the tax burden is, for instance. We need to also look at the regulatory obstruction that actually prevents business activity from
So what we're doing right now as well is we're focusing on Italy and the bond yields there, which are at 6.5% for the 10-year. In South Africa, it's 8%, putting it into perspective. So it really comes down to the point that to raise capital again for Italy, it's going to be at unsustainable levels. Why can an economy such as South Africa handle an 8% interest rate on
firstly,
loans?
Our debt level's much lower, so we can handle an 8% rate and still be very solvent. The overall debt to GDP is about 35 to 40%. Italy is 120%. They cannot fund themselves at that level. Plus, their welfare burden is too high. With an aging population, that welfare burden just keeps their deficit at an unsustainable level at the same time.
What do you foresee from credit rating agencies into 2012? There's been quite a bit of noise and debate about France also getting a downgrade. Do you think that this is imminent?
The US is heading for a downgrade. France is heading
downgrade
for
another.
Well, it'll be also by more credit rating agencies. It'll be not just S&P, etc. France will also be in the firing line. I think the UK will also be in the firing line at some stage, because their budget deficit is big, their debt levels are climbing, etc. Their welfare structures are too heavy.
Can we avoid a default at this point in time? Are you convinced about this coalition or unity government that has been created in Greece?
I actually believe that it's more about the German and French banks, these bailouts, than it is about saving Greece. Ultimately, they are depending on a very mythical creature called the Greek taxpayer to actually help out to basically extend this party,
I'm Greek and I pay tax, just to clarify.
But you pay tax in South Africa and that sort of thing, yes.
With regards to BRICS and the emerging market space, we're still seeing fantastic growth coming through. What is the scenario that is going to play out? Because at this point, we are still seeing that most of the economies are reliant on flows from China, reliant on foreign inflows to keep our currency buoyant. What prediction
I
or
think what you're
scenario
going
do
to
you
see
foresee?
is China is going to take a bit of a back step. I think their growth is going to be lower than expectation. It may well be below 8% next year as they struggle with the housing bubble and the loans against it. Sounds very much like the US housing bubble, etc. It's the same sort of dynamics.
But they said that the housing bubble in China is actually being pushed forward because there is real demand, despite the fact that they've increased rates.
Not at those prices, not at those prices. So there's an overhang of price housing that is unaffordable in China. It's almost like South African Gulf estates. There's a surplus of that, but there's a shortage of other housing, and so China's the same dynamic.